Worked, right?
The next 3 months we're going to be a banner season. Hey, Rock, those shoes are the shit, man. I like those.
I don't have this on my calendar. Oh, oops. Guess it was on my calendar today.
Yeah,
Well,
I forgot.
not gonna be making
Sorry,
that.
guys, we're a little late today.
No, I had another noon webinar podcast I'm supposed to be on.
Is it your own?
No.
Nope.
Somebody else's?
Yeah.
Oh, no. You can go.
No, I'm already half an hour late.
No one texted you?
Well, I got this call from a funny number like 5 minutes ago.
Hey, welcome, everyone. This is Robert and Jason with Mr. Texas Real Estate with Curtis Warden with the Nailed It radio show and podcast. So we're going to do our update from our studio today. We had a very busy day. We're getting a crunch week going here. I'm going to be in Corpus next week, so we had to get a whole bunch of things done. So sorry we're a little late. Other than that, we are absolutely seeing some trends in the marketplace that we want to talk to you about. Our first one is if the SBA is getting through most of our EIDLs, the economic impact, emergency impact, disaster loans, and we've gotten declined on
Lots of them.
lots of them and approved on one.
How much did we ask for in totals? $2 million?
We asked for
Wait,
$2
isn't
million.
that the PPP?
Nope,
Nope,
so
this
the other
was
one.
the EIDL.
Yep. Mm-hmm.
This is
I
all
thought
run
that-
through the Small
I
Business
thought that
Administration.
one was only given like $10,000 or something.
No, there was
no,
a second
this is-
part of it where you could ask for a whole bunch of money,
Okay.
and we did.
Well,
Who knows?
It's too much heat in here. Yeah,
Robert's or
yeah, we got the okay to go to the next stage.
okay.
We asked for $100,000-something.
Did you get a phone call from somebody over the weekend?
No.
I got a phone call from a lady from the SBA.
Oh.
She could not verify on my EIDL. She could not verify that I was Curtis Warden. And I said, "Oh, you may be getting Donald Warden," which is actually my first name. She
Okay.
goes, solved. Okay.
Got it.
She goes, just approved it as being processed.
Interesting.
Good. Yeah, we had gotten our $1,000 from for a number of different companies, but what we didn't get was the next step. We had applied for over $2 million in loans, and well, we're not going to get $2 million, but we're getting something on a 30-year fixed note for 3% annualized. We'll take anything they give us.
We'll take it.
Yeah, so we're taking it, and I think it'll get us at least a truck for our construction company.
Yeah, which, I mean,
Right, we need one.
even if you don't pay it back within a year or whatever, you've got like a certain number of time at a very low interest rate.
Our truck payment's going to be what comes out to $65 a month.
So what are you doing with the truck? You're going to wrap it, right?
It's for our construction company, yeah.
Yeah.
Yep.
That's brilliant.
Well, I don't know if we'll wrap it at all because we just don't want clients.
Here's the problem when you start wrapping vehicles. When I worked at Waste Management, this is the problem they had. There are people out there.
This is something new I did not know
There
about
are
Jason.
people out there that will pull right in front of your beautifully branded truck and slam on the brakes so you hit them. So if you guys
Brake
notice,
check.
so if you guys notice, whenever you see a Waste Management truck, they don't. It's not like they break down that often, but occasionally they do. You'll see like a 1-ton pickup with all the tools and stuff on it. It is unbranded. There's a reason for that, and it's not just Waste Management. It's all these big companies. So if you see a nice, beautiful company truck, one of our guys will be driving, probably talking on the phone, doing whatever, and then all of a sudden somebody just swerves right into him, slams on the brakes, they rear end him, it's our fault, and they're going to go, it's going to be a big lawsuit. So I'm perfectly fine with our construction company not having any identifiable graphics.
And we don't want any customers anyway.
Yeah, we don't. So it's
So, another little tangent. Did you know that Waste Management garbage trucks have a 4-to-1 ratio on how often they change the front right tire to the rest of the tires?
Oh, that's interesting. I didn't know that.
Because every
Because
route is planned
yeah,
to make right
Yeah,
turns.
yeah,
Yep. And they keep hitting the curb.
yeah.
Now that's a market update.
Yeah, that's
you
a
go.
market update for you.
No, but for the loans, it looks like our construction company will be receiving a loan from the federal government under the SBA, which is here's why that's so important and why everyone should have applied when you had the opportunity. Is now and it's such a small amount. It's just barely enough to buy a truck, right? So, but we're in the SBA. we're pre-approved. So
We're gonna have
now
a payment history with them.
Now we do that for 1 year and we can reapply. So now the funding for physical equipment inside our construction company is going to be roughly 3.5%.
Just like what we were talking about on the radio show just a couple seconds ago, it's going back to what you're saying. Whether or not you know how to do it or not, you should have applied. Just apply just so that you get you
in
a reservation of this block of money.
Well, here's what happens is they have another category where if you already were pre-approved for an SBA loan, you could immediately got a $25,000 loan. Mm-hmm. So I'm not rooting or asking for, but God forbid there's another major event here, a weather event, unlike the Corona
Could be
event.
a hurricane, right? I mean,
we can go ahead and apply already being pre-approved for the SBA and pick up our $25K like that.
Yep. That is brilliant.
Yeah.
That's good advice. This is good stuff.
People want to join our mastermind. Like that's what I don't. That's
we were on our mastermind, like our back channel, our mastermind. It's like who's applying, who's gotten it, and
everyone's sharing tips and tricks, like do this and do that, don't do this.
So this is the problem that I see with most people who probably listen, because I listen to it a lot, and I'm always listening, going, well, I'm a guru, I know everything, but that's not true. I mean, the reason why I partnered with you guys. Sure. Is because y'all offer a skill set that I don't have. Like, I'm great at design.
Yes.
I'm great at building this one particular type of house. That's really what I'm good at. But
not the pedestrian kind.
Not the pedestrian kind.
Okay.
Which I learned today that pedestrian was equal to another word, which I'm no longer allowed to say on the Texas Radio Network.
Very good.
So I pedestrian. When I say pedestrian, it has different meaning to it.
Yes.
So, but what I would say is, I see a lot of people that go in and I go, why would you spend money? Now I realize why you would spend money. The benefit and the value that you guys are bringing to the table for at that one point, I still think $7,500 to get the value that you're getting in the room that you're getting in it is cheap.
It just went up to $10,000.
Yeah, that's what I'm saying. At that time,
we
it was
added
$7,500. It was cheap.
We had an attorney now who sits there and talks about how to really do syndications. She has written the syndication documents for almost everyone in Texas. All the gurus, she's already written some syndications for their groups or for them directly, and now she's part of our mastermind, and she breaks it down. So, again, we're getting on the mastermind here. The goal of the mastermind is to make 250 real estate millionaires. Most people come to us are already millionaires somewhere else. Mm-hmm. Now we just want to show them how to do it in real estate.
I think I had to divorce myself of the thought of I've been in real estate for so long. I already know everything, and it's not true. Like, you have a completely different skill set that you're providing. And also, you make it well known. Like, here is the deal. If you can afford $7,500 or $10,000, but you don't have these other criteria, you're not getting in the group.
Yeah.
There's no way. It's a waste of time.
It's just too frustrating for you.
Yeah. I don't know. I just wanted to give you.
Thanks.
I wanted to say what I thought.
Well, we have a great core group, and these guys are buying, and there's a buying frenzy going on right now. I think overall, in a 45-day period, our mastermind will pick up 18 to 20 properties.
Yeah, that's a banner season.
That's a banner season. Yes,
they'll
get their brownies too. So the SBA stuff comes through. So make sure you're checking your email box. You might have forgotten about the stuff you put in. They definitely pulled our credit.
Yeah, that's how I knew we were getting close, because I'm sitting there one day and I get the credit alert, and then you and I were in the studio.
Wait, you're getting a credit alert? What do you have?
Well, I use my FICO.
Okay. I didn't know
we
that.
We manage and monitor our credit like we do our checking account. So I got a hit, and then I was chatting with him the next day, and he goes, "Oh yeah, I got a hit too." So I'm like, "Okay, it must be." And then I saw it was SBA, so I'm like, "I think those loans are coming through."
Yeah.
So we still have one more across our. We didn't get the decline letter on, so I think Mr. Texas Real Estate, as the media and the marketing stuff, will get a loan as well.
Perfect.
Yeah, that'll be really good. So look, guys, check out your SBA stuff. For those of you who weren't on yesterday, Jennifer Hernandez and Ashley Patton covered refis in this refi market. We do have that video on Facebook Live, so make sure you check that out. And if you need a link, just go ahead and text us at 281-401-9008. Give us your email address, we'll send you the whole package. But it's happening.
Yeah.
I'm sorry.
No,
but
go ahead.
Here was the thing that I learned yesterday. There's a difference in that, and I keep calling it FHA world, which I guess it is, but in that Fannie Freddie world between second houses and investment houses.
Yeah, I didn't make that distinction either.
Yeah.
Until we started talking about the other beach house we were going to buy, and I didn't know there was an entire subset. Let's call it owner occupant, which is single family home I live in, and then vacation, which really what it is vacation home.
Yeah.
Why is this? Why is there two different levels? Why is that an issue?
No,
cheaper down payment.
Cheaper down payment,
much cheaper
and
than
lower
an investment
interest
property,
rate.
and lower interest rate than investment property.
Okay, so what is the down payment? Like 5%?
10%.
10%.
Okay.
It could be as high as 15.
Okay.
So that house in
Yes.
Corpus,
Yes.
with the crow's nest,
Oh yeah, that's going to be your second home.
that will
isn't
be
it?
my second house.
That's awesome. But there's some specific requirements. It's got to be 55 miles away from your primary residence.
It is.
There's a whole list of things that you've got to hit, and then you can then get this second home.
And the interest rate is still what,
It's
3.5%?
It's almost the same as
yeah,
this.
roughly there. Yeah.
It's almost the same
the
as your homestead.
Yeah, that's good.
Maybe
yeah, half a point
maybe
more.
half a point difference.
You can still work it the same way that you do your primary residence. So I mean,
And
you
they'll-
own it for 2 years, sell it, and trade up and get something.
No,
different,
you've got to
right?
live in it for 2 years in a
2 years.
5-year period. That's the homestead exemption for taxes.
Yes,
But
and
you
I'm
don't
saying,
get
what
that-
do you get to do? What are the benefits tax wise of doing just another
It's a
write off?
cheaper
There's
loan.
no-
It's a cheaper loan.
But she also said they do recognize that some people will Airbnb their second home when they're not using it.
So here's the downside. On the second home, even if you're Airbnb-ing it, they won't apply that towards your DTI
No,
when you buy that house.
you got to qualify under your basic.
You got to qualify for 2 houses under your income.
Mm-hmm.
If you're doing Airbnb, if you have a long term rental
Yeah,
already
75%
established in
of that.
Yeah, that's
75%.
75%.
Yep.
Yeah. But that second home has to be they qualify you just like if you were to buy, a second home, and it's not an income producing property and that sort of thing. So you got to have enough income to offset the DTI of the next property.
So I wake up in the morning and I'm still listening to you on the radio.
Mm-hmm.
And my question to you is, since we're doing a market update.
What do you mean still? You mean you went to bed listening to us on the radio?
No, it means that since you guys have started, I
Oh, I got it.
continue
Oh,
to
okay.
listen.
You're
Okay,
still
I got
listening.
you.
Oh,
Okay.
thank you.
Yes.
Yeah,
yes.
appreciate that.
You
So you're the guy.
The one guy that's
The
listening
one
that
guy.
late at night.
That one
Yeah,
guy.
He gets text messages like 4 in the morning.
3 in the morning. Someone's listening to our podcast 3 in the morning. It's like,
Well, I know when I'm on, it also says Tony Robbins is also watching.
I see Tony,
Grant
whoever
Cardone
that
is also watching.
yeah.
The one that was shocking was Steve Jobs was on there too.
Steve,
I
how
was
did
like,
how'd you get on,
That's
Steve?
funny.
Beyond the grave.
"What?" So you keep referring back that you said a bunch of people are saying, where is the crash? Like you keep challenging this.
Yeah.
That you've heard people say that. And
Yeah.
Big real estate crash coming.
Okay, there's a big real estate crash coming, and every indicator
Is
that
it really
you're
worth
saying is
$85,000?
no, that it's not,
That's correct.
But not the gurus.
but not the gurus.
That's right.
What are the gurus saying?
There's a crash coming. Join our class.
We're going to teach you how to buy foreclosures and
Teach
short
you how to buy
sales.
foreclosures and short sales.
That's
Get
it.
prepared.
They're not coming, guys.
That's who we're talking about. We're not talking about.
Individuals.
We're talking about the gurus, and we just got one last night, and it was one of the absolute
It was so slimy.
best, worst guru things I've ever seen in my
I
life.
thought it was a parody at first.
I thought it was campy. Yes. Like I thought like you'd watch it, sitting on a bar stool drinking a martini. Like that was how this guy is in a silver lame suit on stage talking about the impending doom of the real estate market and how it's time for you to get in. And here's the line. It's worth $85,000. And then it says, is it really worth $85,000? And then it says, maybe. Maybe not. And I'm like, who's writing that copy? That is the worst copy in the world.
No, you know what that copy screams to me? I'm not going to get in trouble with the FTC.
Yes,
That's what that
I'm not-
copy
yeah.
screams.
And it's like, so-and-so did, has sold 4,000 houses. And I'm like, did she sell the 4,000 houses or did the brokerage she worked in sell the 4,000 houses?
I'm like, we know what selling 4,000 houses looks like. And
That's
I'm like,
a lot of work.
That's a lot. And they don't have time to get on Facebook and be the
No.
Facebook real estate guru.
No.
They don't
And,
have time.
and I'll give them the credit. Their ClickFunnels address was better than we could never figure out the ClickFunnels URL. Even though we paid a dude like $5,000 to set up, that's no more marketing consultants.
Yeah,
And but theirs was slick. It was nice. It was great, and they all looked like total Dallas wannabe millionaires.
Oh, yeah. That's a
Big
good point.
hair,
$40,000
hairspray,
millionaire.
Yeah.
the suits, the whole thing.
Yeah.
I was like, oh, this is going to play so well in Dallas. This does so great in Dallas. Not so much Houston because most of these are wives are of engineers. And they don't fall for that crap, right?
Yeah, yeah.
But, man, in Dallas, that's going to play
That's
really
going to play well.
That-
It's going to play well in L.A.
Oh, L.A. is going to be
Atlanta.
great. Atlanta for sure.
Miami.
Miami.
Mm.
We were looking at it, and we are just like, here it is. And they're like calling and because we were making fun the other day on our
But
show about
wouldn't it work in L.A. and in Miami? Wouldn't you see where there could be a crash in their market because
Absolutely.
Yes.
they don't-
Yes.
they have non-QM.
Yes. But I'm not saying that those gurus aren't going to do anything about it.
Oh
No,
no,
those gurus can't.
I'm not saying that. I'm just saying in Texas, I do not see where the crash will be
No.
anywhere where there's Fannie Mae and Freddie Mac.
No.
I think it's going to be completely different.
Mm-hmm.
And if there is a crash, it's going to be like market specific, like townhouse, condo,
Yeah, for sure.
places where you would have
Mm-hmm.
like an additional payment every year. You'll probably have homeowners associations
Yep.
coming in trying to foreclose on people's
Well,
property.
that's the travel club.
Yeah, that's why. So we sent out an email last week, and the report came out, and it's cities that have already got the highest delinquencies, not even really delinquencies because they're in forbearance, but potential delinquencies and foreclosures and all that. And it was literally the top two markets we had already picked. It was Miami and Vegas.
Yep.
And we knew it because we saw the underlying data that said entertainment, hospitality. It's like those are going to be the two biggest markets.
So if you only had one play and you could go to one of those destinations, would you go to LA or would you go to Vegas or Miami?
Vegas.
If I had one play, I had to pick like one.
You had to pick one area. Where would you go that would provide you the most long-term upside? Where would you go?
It's still-
Miami?
no,
It's
Still
not
go to
L.A.
Texas.
It's not L.A. at all. There's-
I didn't say LA.
Too
I
hard.
said Vegas
Well,
or
we're
Miami.
thinking, I wouldn't go to either one.
no.
Ooh,
I wouldn't go to either one.
You-
Not for long-term upside.
We're
long-term
here.
upside, Vegas. Yes.
If
You
you're
wanna
making
know
us
why?
choose between Vegas and Miami, I would pick Vegas.
Yeah.
And why is that?
But I would pick Houston.
What's coming
out of
into
over all that.
Vegas?
Well, there's a lot of stuff coming into Vegas, but here's what's always in Vegas: money.
And conventions?
No,
And
same thing in
now-
Miami, same thing. Yeah, but I think Vegas has. So I worked the Vegas market. That's where I very started real estate, and I was only there for about 9 months. They're so similar too. They both have a great international draw. But I would go to Vegas just based on the fact that they took a harder hit in 2008, 2009. So I think there is they'll recognize the bottom of the market.
Yeah,
And they're not scared to sell off the bottom of the market versus Miami, maybe not
that's
so much.
true. Well, we pulled the one of those webinars we did. I pulled the data live. We looked at
Yeah.
the last three. What a
real crash looks
We were
like.
educating people on what a real estate crash looks
Right.
like. What happened here in 08 was not
Wasn't-
a real
was
estate
not a
crash.
real estate.
This was not a real estate
It's a
crash.
financial.
It was a gully.
No, there was no real estate crash. There were some neighborhoods that lost some value, but
It was
wasn't-
It was no more of a dip than January, February, March are in this market.
Yeah, it wasn't that bad here.
Yep. It's the same season
as
dip.
compared
Which one?
In this
08,
market, there
this
was
that was not a big crash.
no. It was the same as a seasonal
was a little-
fluctuation.
It was just a little. You compare that to Miami, Vegas, L.A., San Diego, the crash looks like this. That's what the chart looks like. And Houston looks like this. Whoop, and then it's right back up. What a real estate crash looks like, peak, trough, it's like on both sides of the graph.
50%.
But it was a nationwide crash.
Oh, of course, yes.
Not Houston crash. It was a
No, it was nationwide.
nationwide
Yeah,
crash.
absolutely. Yep.
Yeah.
And when you're dealing with a 20% drop in the city of Houston on prices in certain areas, that is a crash for those people.
In that small market.
But I will agree with you where
Right.
most of the people were able to get out of their property if they wanted to
Yes.
and break even.
Yes. The difference between this market and the the Western market,
Yeah.
time.
Mm-hmm.
LA didn't recover to 2013. By
Yeah.
2011, this was already on recovery.
Yeah, that was a big difference.
And we need to thank Tark and Christina for that. They were
Yeah, they brought it back.
They were bringing it back up one show at a time.
Yeah. Yes. So there's the SBA. That's looking good. The refi market's looking fantastic. that will produce a ton more money into the economy. So that is absolutely a target, and everyone is it's not spoken of, but everyone is hoping for it, right?
Well, it's I was watching Dr. Dotzauer's presentation to a Sotheby's brokerage in Central Texas, and he said if you look at the last couple of crashes, real estate's the one that's always brought it back.
Yeah.
And typically it's with lower rates. People are refinancing, got a little bit more money in their pocket. Maybe they've taken a cash out, or they haven't, but they've been able to reduce their payment. And he said, in earnest, that essentially brings the rest of the market back.
You said something yesterday on the radio that was so profound. You said it's in a market where rents are always accelerating, and people buy low, and then they expect to keep increasing rent. Right now you said the refinance is actually your market, like you're getting able to recapture back some of your cash flow.
Some of your cash
You
flow.
said
right.
this yesterday, I think.
Yeah,
because
extend the life of your property.
Because the problem right now is these houses have appreciated so much, your taxes and insurance have gotten so expensive. But now you can refinance and recapture some of that cash flow with a lower rate. So some of these landlords are going to be able to hold on for a couple of more years.
Yeah, because you were talking about the guy who said if he had $500,000 more dollars, he would have been able to make it.
Right.
through.
Yeah.
Yep.
You know him, by the way.
So, yeah, I'm just saying,
It's a great story.
well, listening to your radio show, you
also
get
has
some
a good
really
story
good
on-
nuggets that you don't get on the market recap,
Oh,
or maybe
yeah,
you
yeah.
don't want to re-talk about it.
Yeah.
At least I don't like regurgitating the same stuff.
I
but
don't either, yeah.
I just wanted you to know,
I
like,
appreciate
I
that.
thought that was gold for someone who may not have heard that.
And again, looking at our marketplace, let's say a restaurant does fold, and that's not good, right? And a restaurant in the Heights fold, and let's say they had 30 people working there. How many of that 30 actually qualified or had a mortgage?
Very little.
Yeah,
Right.
so let's talk. But
But how many of them were
10%?
renters?
No, that's the
true.
bigger market. That's the
That's
problem.
true.
How many of
Yes.
them were? How many of them were roommates?
No, absolutely. But if you go on unemployment these days, you're at $27 an hour. You're making more than a restaurant, right? So if you're a landlord and you're getting hit with this unemployment stuff, that should not be a reality. That is not a reality. There is more than enough money to pay for the rent. That is why Congress set it up that way. So we are firm believers that anyone who is not paying our rent, we'd like to see the data. We'd really like to see how you got turned down for unemployment, you're not getting your stimulus check, and then we can talk about hardship versus, hey, I just lost my job. Because you lost your job and now you're making $1,100 a week. That's a lot of money.
Yeah.
And that lasts until when? July?
End of the year.
End of the year.
Is it the end of the year? I don't know.
Just January. They want to extend it for 2021.
Wow, it's nuts.
Why not? Give the money away.
What did y'all make of Fertitta talking about the 600 restaurants, the people,
Yep.
and real estate, at least his commercial real estate?
It's going to be bad.
But we knew commercial
Retail.
real estate was
Yeah.
going to be bad before this thing happened.
You did. You had been saying that on the radio.
Oh, well, and it wasn't just me. I got it from. I was watching. Who was it? Was it Sam Zell? Sam Zell and somebody else have been shorting the commercial real estate market for
Oh, yeah.
18 months now.
Oh.
So they saw it. They were like, "Here it comes! Here it comes! We're just waiting." Heck, how many? I was driving yesterday.
David, not Icon.
Carl Icahn.
Carl
may have been
Icahn.
the other one.
Short
Yeah.
at the market, yeah.
So those guys saw that one coming.
Commercial REITs short a lot of stuff.
Yeah, they shorted all of it. So, and my understanding, I'm not a big commercial lease guy, but on the retail and restaurant side, some of that rent is based off net or gross revenue of
Sure,
the
yeah,
the retail.
yeah.
So it's
Called a gross lease, yeah.
But I also look at Fertitta. He was screaming and crying 2 weeks in this thing where he's going to be bankrupt and everything's going under, and I'm like, are you kidding me, man? Our banks make us keep 6 months of reserves in a checking account somewhere. I'm like, you can't. And then, of course, I don't know if he ever got that bond pass. He put out and tried to get a bond, like 14%
17%,
interest
yeah.
bond, something crazy. But
Our
yeah,
syndications pay 18,
that's true.
projected.
Projected on our syndication.
Mm-hmm.
So, I think that the commercial space is going to be interesting. I did a Facebook Live today, and I told everybody I saved all the emails from everybody that told me that we shouldn't buy an office building. I saved all of them.
Are you going to print it out?
I'm
Make a little notebook, maybe?
Yeah.
Put it in the front desk?
You know,
Here are all the geniuses.
here's all the people that told us not to do this.
Yes.
I thought the
There's-
most brilliant thing about it was when y'all did the Founders Club
Yeah.
and then the first person that you posted on it was Eddie Gant.
Right.
Because the one person in the industry that you could look to as whether this is going to be a good investment
Bellwether
or not
guy. Yep.
Yeah,
absolutely.
that's it.
Yep.
was Eddie Gant.
Yeah.
He's in.
If he's already invested into it, then you done know
Still
you
have
done
spots
screwed
open if
up.
you're
Yeah,
interested in
yeah.
the Founders Club.
Okay.
Please reach out to us at 281-401-9008. It's 281-401-9008.
You want to talk about non-QM?
I want one more
Or you
point
want
on
more point?
commercial.
All right.
Is it takes about a decade, and it might be even quicker in this marketplace, where real estate will always find its highest and best use.
Mm-hmm.
So if there are a ton of office buildings that are dropping like mad in the energy corridor, in the Galleria, wherever, someone's going to come along and say, hey, I'll pay you 40 cents on the dollar for that, and I'll convert those into loft luxury living, right?
Yeah.
And in a decade, they'll be filled back out. The people will be there. It just won't be producing paper. It'll just be a place for residents. And then the market will have shifted, and the office buildings will all be opened up in Cypress up the 290 corridor.
Mm-hmm.
So real estate always finds its highest and best use.
But for 10 years, we were dealing with traffic congestion through construction on 290. So now
Now it's wide
290
open, yeah.
is going to have a revitalization
Right.
in
Well,
commercial.
And you know who's leading that?
Y'all are.
The Texas Real Estate Center.
That's right. There's a reason it is off 290. But do you remember? You remember when they were doing construction
On
down
I-10?
I-10, right?
Yeah.
And Katy was $75, $80 a foot for a single-family house. I-10 gets finished. It takes another year or two before people are like, well, the traffic isn't that bad. I think we're going to see the exact same thing up and down
Up
290.
290, yeah.
You're
All
going
the
to
way
see
up to
these
the
houses that are, I'm looking at them now, 3,500 square foot house that's $280,000. That's going to be $100, $125 a square foot inside of a year.
I will tell you exactly where I'd be focusing all my money is the rectangle. The 610 loop, I-10, 290, Beltway.
Yeah.
Right in there is the ugliest part of Houston. It's the elbow. I mean, not the elbow, the armpit of Houston. That mall is going to be shut down and collapse.
that's
and
right.
they're
High-speed
rebuilding
rail.
something there.
High-speed
And
rail.
it's-
Yeah, the
and it's
rail's
going
going to be there.
And it's going to go all down that corridor.
Yeah,
I
I
agree.
agree with that.
Yeah, could totally agree. Yep.
And guess who bought a commercial piece of property right in that corridor?
This guy?
Y'all.
Oh, yeah.
Y'all
Oh,
did.
yeah, we did.
We did.
Now's
Well,
the
I
time
just-
to get some.
I was
get
teeing
an-
you up.
Get an option on land.
I thought you were going to tell us about some deal you just closed. I was like, what'd you
No.
get?
No, we did. Yeah.
By the way, Ryan DeGennaro and I bought 1,000 apartment complexes, Class A, at 0.1% cap rate.
You know, it was interesting. Our broker told us, we were looking at that deal all in the middle of this COVID stuff. He said, we're only buying that piece of property for $5 more per land square foot to get the building on it.
$5
You
more
can't
square
even-
foot for the land.
You can't even pay $5 a square foot to build.
Yeah.
No, right?
Yeah.
So
it
it's a
was
free building.
crazy. Basically, we got a free building.
And then we'll figure out its highest and best use in about 10 years.
And the other thing he keeps telling us, he's like, don't dump a lot of money into it, because he said, I can almost guarantee you that they will tear this thing down and build an office tower or build a big old multifamily. He's like, don't, make it nice, obviously, but let's not pour a bunch of money into it, because in 5 to 10 years or 15 years, if you guys outgrow the building, you need a bigger one, that you're going to sell this thing for a lot of value. And I was like, geez, I didn't realize that. And then he started sharing some numbers inside the Beltway and all that other stuff. But yeah, it seems like now, and it's hard for me to wrap my mind around it, outside the Beltway and in is like inside the loop was 7 years ago, where people are like, well, maybe I can live, here, like you said, kind of that little section right there, Spring Branch, 290 and all that other stuff. And it's turning real fast. And folks are saying, I don't mind living just inside the Beltway, because it's really not that much further from my office, because 290 is now fixed. I-10 is now fixed. They're doing all that work on 59 at 610 right now. So once they get all that stuff sorted out, it's like, an extra 5 to 7 minutes to live outside of 610 inside the Beltway versus inside 610. So it's interesting to see. It really is. So I think there's some great deals to be had inside the Beltway, like you had said in that
In that rectangle.
that little area right there. So
Non-QM.
non-QM. I'm talking about non-QM. They're back.
They are back.
They're all back.
And supposedly they never disappeared. We
Oh,
were just missing them.
Just kidding.
We just missed
No,
them.
I got an email from one of them this morning that said, well, the country was America was closed, but we were still open. And I'm like, whatever. We talked to all your executives over there. I know you guys were
We had
closed.
30 loans that you declined. What are you talking about?
I was like,
What the hell are you talking about?
yeah, what are you talking about? You guys were closed. We're here for you. I was like, you weren't here for me 60 days ago.
Right. Where are you?
Anyway, so they said they're back. I was on one of the mortgage websites last night, and they said they're bringing out 4 new non-QM products, and then we know of a couple of others that have opened back up. So the terms are not
65 is the new number.
Yeah, 65% loan to cost, not loan to value.
No, not loan to value.
But my suspicion is give it a couple more months. Just give it some time for the market to recover. They're going to get better. Somebody's going to step in. Some big warehouse, is going to step in and say, you know what? Let's change it to 80% LTV and let's go.
I think once that warehouse clears their notes.
Yeah. Guys are still sitting on a lot of their own
they're
paper.
still sitting on a lot of their own paper. Once they clear those notes, then they'll go back in.
I think that a lot of people are missing the value right now on just selling your primary residence or refining your primary residence and buying a distressed piece of real estate in this depressed interest going bigger
Yes.
and getting the same amount that you're paying, but actually writing up the value. Not a lot of people are doing that. Most people I know have been in their house for 5-7 years.
Time to refi.
But either it's time to refi or time to rebuy.
Yeah, you can do that.
And cash out all the equity that you've already gained, dump that in, and ride up another 200.
Yep.
Yeah, I mean it makes a lot of sense, especially on the primary residence side, right? Because you don't pay any taxes below $250,000 in gain. So I'm not an accountant, CPA. Go talk to your accountant. But that homestead stuff is pretty powerful when you just continue to keep upgrading, and then eventually after 2 or 3 moves, you end up getting a house free and clear.
Yeah.
Yep.
3 to 4. Yeah.
Isn't that what they said? Like it takes 6 years, and you'll have almost $1 million house that you'll own with like 40%.
Yeah,
That is correct.
And then you're basically writing the own terms of wherever you want to go and whatever you want to do.
Mm-hmm. I agree with that. But you got to, people think that the appreciation was fast over the last couple of years, especially from like 12 to 16.
Now,
Do you
this
remember
is
that?
where I see your logic coming through 100%.
So
like in the next 5 sentences, people should be writing this down.
Probably should be.
And you should not be quoting yourself. I will quote you.
No, there's a reason we're doing the quotes now. I have to tell you the story, the quote story. But from 12 to 16, we saw all that appreciation, right? And I think we're about to go through another huge ramp of that, especially below $300,000. You're going to go into a neighborhood that you bought a rental property in 2 years ago, and then you're going to realize, holy cow, in the last 6 months, these things won't even cash flow because they're going to appreciate so fast.
Yeah.
And what happens with the appreciation? So this goes to why you're saying your house will not cash flow. Because the one part of your model that you're not counting on is your taxes.
Taxes and insurance. It's taxes and insurance.
And as that property goes up and you're you're only paying $6,000 a month now because you don't get that homestead.
That's right.
Now you're taking $6,000 and dividing that by 12 months.
Right. Yeah.
There goes all your cash flow.
That's right. Cash flow is gone. Well, and there's a dirty little thing that's going on in Houston right now, and I won't tell you who told me this and I know he absolutely knows this because he works with these multifamily investors. But there are multifamily investors that are about to get foreclosed on or file BK because the taxes went up so fast.
Oh my goodness.
Their 7 cap Class Cs, yeah, I know. Their 7 cap Class Cs are no longer cash flowing. They're all negative yields. They're losing money on them. Because, again, the taxes went up so fast.
You mean they couldn't find a sucker to retrade it with?
That's exactly what happened, right?
Yeah.
So taxes went up. They can't do anything. They're locked up. So we're going to see some now. How that all works, I have no idea. I mean, do they give it up? Do they find some other sucker to give it to? Do they have a capital call?
retrade.
But it's not going to be good. It's not going to be good. We might have some opportunities with some local banks, but the tax issue is certainly a big issue with regards to appreciation.
Yeah, and then I think overall, it's you've got to get off that crack candy known as hard money, right? You've got to start getting your portfolio together, to get your personal financial statement together.
You need to be effable.
To do yes,
Yeah,
to
you need
get
to
your
fundable.
get your documents together, get your tax records together, and go into a bank and take it. The problem is you got to take it on the chin for the first one. And they're like, "Well, we'll do 60%."
Yeah, and you're like, come on.
man.
I've
Yeah.
done 1,000 of these things.
Right?
And
Like,
it's
well, we just don't know you, so
we
we'll
don't
do
know you
60%.
yet. Okay.
We could do up to 75, but we're going to do 60 on this, so that everyone at that loan committee feels safe.
But right now is also very important because in July the 15th is when you should be preparing yourself to start actually paying some taxes so that
Yep.
you can afford to be effable,
Yeah, fundable.
which means, you,
We're almost done this year. Yeah.
you might have to actually not write off as much as you typically would to be in hard
Oh, yeah.
money.
Well, I've had to do that many times. Yeah.
Yeah.
So you take it a little bit on the chin on July 15th, but you'll be able to recapture towards the back half of the year.
For the last 2 years, Jason and I have done nothing but reinvest.
That's all we've done. Just
That's
reinvest.
all reinvest. And we look around, a lot of people are making more money than us.
So
And
where
we're
did the
gonna just
Lambos
keep-
come from?
That's why I don't have a Lambo.
That's why we don't have a Lambo. That's why we drive a Jeep
Yeah, you know where
and
the
a
Lambo
Toyota.
is? 5295 Hollister.
Yeah, that's the
You
Lambo.
guys go see that Lambo.
Beautiful Lambo out
And
there.
you go down to Corpus Christi and see all the Lambos we got down there.
I got a Model S down at Corpus Christi, right?
I always tell people you want to follow the guru that doesn't look like the guru, but he has all of the symbols, or he doesn't have the symbols of being a guru. Steve Davis was the guy that owned me. I went into Lifestyles Unlimited, didn't know anything, sat down with my wife. I was in my polo shirt, my gold watch, my khakis, really nice shoes. And he goes, yeah, it's going to be $500 to come in for the weekend.
Mhm.
And I said, I don't have $500. He goes, can you do $350? I said, I got $150. He goes, And he looked at me and he goes, all the symbols of wealth without actual wealth.
Nice.
And that killed me.
Mhm.
Yeah, that's a good one.
Yeah.
I don't know. I just wanted to throw
No,
something
it's-
out there.
No, that's a
Perfect.
good one.
So I see a lot of people out there that are gurus by symbol, but when you actually ask them, hey, show me your HUD statements.
Yeah.
Let's
So,
look at HUD statements.
I don't know if you've ever heard this story. I know Jason has. One of my mentors in this business is a guy named Mick Blackwell. And the best way to describe Mick Blackwell is he is the deca-millionaire homeless guy. So I went
I actually got to meet Mick.
Mick is an interesting cat, right?
Yeah.
So I went lobster fishing, which is nowhere as off the Catalina Islands, right? So I add that in there, which is nowhere as sexy as it sounds. It's a lot of work of dropping the net, picking it up, dropping it, picking it up, dropping, picking it up. And I went out there with a guy named Mick Blackwell and Steve Love. And Mick said, hey, how many flips have you done? I said, hey, man, I've been about 250. He's like, oh, that's great. So you must be worth, what, $25 million? I said, no, I'm still kind of broke. He's like, yeah, because you keep giving away the assets. And now lobster fishing we started at 1 catching bait. Then we packed the bait and we dropped the nets just at sunset because they come out at night. And so we worked all through the night. So it was a good 11 hours of this guy just totally verbally abusing me about, hey, do you know about this? This. And somewhere around 2:30 in the morning, he says, anytime I want to go anywhere, I go first class, 5-star, everything. And he says, and all I do is refi a house. I said, well, what do you mean? He's like, you don't pay taxes on a cash out refi. I said, I did not know that. He's like, yeah, so I have 1,200 properties, and I can refi anytime I want to get one, and I'll pull $40,000 out, and I go spend it, and there's no taxes on it. And I'm like, oh. And it was at that moment that I shifted, took everything I was teaching, turned it into big game hunting, which is buy, fix, and hold program, and I started down that way. But anyway, the guy doesn't look anything like a guru, a little overweight, but he goes fishing all the time. He bought a used RV just to go fishing everywhere, from Mexico all the way up to salmon in Canada and Alaska. And he's sitting on his cooler filled with lobster. We took in the max. And he's sitting on the dock. We're on Catalina. The only way to get off Catalina is by helicopter or ferry. We didn't buy the helicopter. We're taking the ferry out. And he's just sitting there in a ripped T-shirt stinking like fish. And some lady comes by and gives him a $5 bill and says, hey, get some breakfast. Talk about gurus that don't look like they're gurus.
Yeah.
Reverse engineering, Mick's probably a $200 million guy.
Mm-hmm.
And all he does is fish, and when he wants to go fish, he fished the Amazon, dude. Yeah, I fished the Amazon. Went out to the Amazon, did some fishing.
When I go fishing at the Quest Expo or any Quest event, I never go fishing based on the attire that someone's wearing there.
Yes.
Yeah.
I have learned that some of the richest guys in that room do not look very rich.
Yeah, they dress like this here.
Yeah, well, not even like this here. Like this is
It's
average.
cleaned up.
Yeah,
This is cleaned up. There's no stains on my shirt from lunch.
Anything else for the market, Jason?
I think that's again. I mean, I'm still holding to all those predictions. This is going to be absolutely insane once the market opens back up. It's been kind of funny. I keep reading stuff where people say, well, the market's, we're already fully opened up, and I'm like, man, I drive up and down I-10 like it's, like we're in 290 in the middle of nowhere going to Austin, or I-10 on the way out to San Antonio. It's like there's still nobody.
Keep your kids home.
Yeah, no kidding. School's closed, so nobody's going to work. But
Right.
I don't see. It's hot already. It's just about to get hotter. It is just
It's pool time. My pool's ready to go.
Yeah, there you go.
Pool time.
Just go to Har and just
You have
look
a pool?
Hell yeah, I have a pool.
Oh,
He's got.
I
I wouldn't move to Houston without the pool.
okay.
That was one of the criteria. Like,
like,
it
got a
has
pool.
to have a pool.
And I can tell you, after having a pool, I don't know if I could live anywhere without having it.
No,
It's
especially here. My goodness.
like, it just looks nice too.
It does. Yeah.
It does look nice. But I don't. You guys get ready. You think real estate's expensive now? Just
Yeah,
wait.
just wait.
It's getting there. It's gonna get there.
Squiggly line.
Squiggly line JB.
Excellent. So
Let's
reach
steal my
out to us
stuff.
at
Uh-oh.
281
Finger pistols.
401 9008. 281 401 9008. Thanks a lot, guys.